to Hey, good morning, everyone. It's almost 7:30. You're joining Coffee and Grain Markets with Dr. Lee and the Farm Financial Management and Policy Institute. We'll wait about one more minute to make sure folks are on, and we'll get started. Well, good morning again, folks. My name is Eric Reeker. I'm a field specialist in farm management with OSU Extension and the Farm Financial Management and Policy Institute. Thank you for joining us for the Coffee and Grain Markets with Dr. Lee. Joining us is Dr. Lee, Assistant Professor and Extension Economist with Ag Econ and the Department of Extension. This morning, Dr. Lee, we're going to kick it off. We have a short time with everybody. We first and foremost want to thank Ohio Soybean Council for sponsoring this Coffee and Grain Markets with Dr. Lee. Let's kick it right off, Sinky, and give us a quick overview of the USDA WASDE report and what's a snapshot of the market from October's report.
Thanks, Eric, for the nice introduction, and thanks to everybody for joining today. Okay, without further ado, let's get started. Here's the corn market snapshot showing the October WASDE report, which was released last week. And in this table, USDA modestly adjusted its estimate from last month. So it was actually not very like drastic change. But first, when looking at the supply side, the national corn yield is estimated at 183.8 bushels per acre, which is a record high number. So basically, we had a record high corn production last year, turning into a large old crop carryout now. On top of that, we are having a record high yield this year, making the total corn supply expected to be close to 17 billion bushels. And this is 260 million bushels larger than last year. So we all know that the corn market has been pretty bearish since last year due to the large supply. And given the production estimates, the supply-driven weak corn market will likely continue through the 24-25 market year. And speaking on the demand side, the report has really changed the demand estimates from last month. Only export number is slightly adjusted up by 25 million bushels. It looks like USDA just pivoting around the historical numbers because we still have more than 10 months left through the end of this market year. So I'm pretty sure these demand estimates will change quite a bit as we move forward. As a result of the large supply, when you look at the bottom of the table, the ending stock is projected to be around 2 billion bushels, 239 million bushels larger than last year. Also, the stocks to use ratio is expected to be 13.3%. Typically, 10% of stocks to use ratio is regarded as a threshold where the corn market turns into a bearish phase. And in that sense, the corn market started from weak fundamentals, and it is expected to be even weaker in this market year. For the season average price, USDA predicts $4.10 per bushel. Interestingly, USDA adjusted down the 23-24 market year price by 10 cents compared to last month, which is not very common to see this size of adjustments. So that is really a quick overview of the corn market, which is not very rosy. But anyway, that's the snapshot of corn. And if we just look at the soybean side, here we go. So this is a WASDE report, like soybean side supply and demand table. And USDA also made minor adjustments from last month for soybeans. There are a couple of things I want to highlight in this table. First, the national soybean yield is estimated at 53.1 bushels per acre. This is a slight down from last month, but still this is a record high. So we should note that we have a lot of soybeans planted in the spring, and now they are expected to make a record high yield. So the total supply of soybean is projected to be 4.9 billion bushels, which is 492 million bushels larger than last year. This great harvest prospect itself is not bad, but from the market prospect or market perspective, the massive new crop is expected to weaken the soybean fundamentals quite a bit. Although USDA did not make a significant change in demand estimates from what they reported last month, I want to point out that the report shows a pretty strong demand prospect compared to last year. So by and large, when you look at the last column, like the right column in the table, those are just year-to-year comparison, and you can see most of the numbers are colored in green, indicating they are larger than last year. Particularly, soybean crushing is predicted to be 138 million bushels greater than last year, mainly because the large supply and the expansion of renewable soybean diesel. Also, soybean export is projected to be increased by 155 million bushels. I'm not sure how much faith we can have with this projection at this point. Probably the number will change subject to the Brazilian soybean production. So I'm going to talk about this later a little more. But anyway, lastly, the ending stock is predicted to be at 550 million bushels, which is a substantial increase from last year. The stock's use ratio is ramped up by 5% from last year. As mentioned earlier, the 10% of stocks use ratio is somewhat useful benchmark to read the market, both for corn and soybeans. So given the 13% stocks use ratio, the weak soybean fundamentals are expected to make a lower season average price, which is currently projected at $10.80 per bushel. Similar to corn, USDA cut the 23-24 season average price by 10 cents, reporting $12.40 per bushel as its new estimate. And for the interest of time, I'm not going to go through the wheat supply and demand today, but the presentation file will be posted on the Farm Office webpage, and you will be able to find the wheat table there. So that's
Awesome.
yeah,
Don't forget about the wheat growers, Sankey.
sure, yeah,
I appreciate that in the tables.
yeah,
You piqued my interest on the uncertainty surrounding the exports. I know you're going to get to that, but before you get to that, you mentioned that supply is leading to bearish market conditions. Can you elaborate just a little bit more on the production updates and production
sure, yeah.
issues?
So let's probably I think this map will help us to understand what's happening in the field. So this is a state level corn yield map. So the number at the top shows the state average yield, and the number at the bottom shows the percentage change from last year. For example, in Ohio, the average yield is 183 bushels per acre, and this is 7.6% less than last year's yield. It is interesting that the corn yield map colors are almost exactly flipped from last year. Last year, many Eastern Corn Belt states, including Ohio and Southeastern states, had excellent yields, while the Western Corn Belt states suffered from the weather shocks. But this year, many Western Corn Belt states are seeing record high yields, while the Eastern region is experiencing weather shocks and expecting a significant drop in yield. So altogether, the national corn yield is, as mentioned earlier, estimated at 183.8 bushels per acre. And this is about 3.7% higher than 2023. So from the standpoint of Ohio farmers, obviously this is a rough market. We couldn't produce much, but the price keeps going down. So locally, the supply demand principle is not going to work out in a short term because of this strong national supply. What about soybeans? So when you look at the soybean, we actually have a pretty similar story. The soybean production situation is also more or less the same as corn. So Ohio soybean yield is estimated at 52 bushels per acre, which is more than 10% drop from last year. By contrast, many Western states came through the growing season incredibly well, expecting the record high yields. The national soybean is projected at 53.1 bushels per acre, which is 4.9% greater than 2023. So for many soybean farmers in Eastern Corn Belt and Southeastern states, it's going to be a tough market too. So that's very rough like production situation across the states. And when we look at the basis distribution, which is also, I think, useful information to read the supply situation. The Ohio and Indiana regions are showing weak basis. Corn basis in Ohio is at around 60 to 70 under the nearby December futures contract. Soybean basis in Ohio is in the range between 50 to 64 under the nearby November futures contract. So as I mentioned earlier, even though we don't see a good harvest prospect in Ohio, the cash market is remaining sluggish because of this indirect high yield from other states. So that's the current situation. One more
Sinky,
slide. Yeah.
did you
Oh,
have slides on basis?
oh yeah. Sorry. I think for some reason the slide didn't switched. So yeah, this is the map. And as I mentioned before, here is can you see my mouse cursor actually?
I do not. David, do you? I don't see your mouse or a pointer.
Okay, yeah. But yeah, but can you see the basis map?
Yes, we're seeing
Okay,
the
great.
basis
Yeah.
map. Corn
Yeah,
on the
I
left.
clicked it, but I think that like screen share is not really working at that like at the moment. But anyway, here's the corn basis and soybean basis map. And as you can see, by and large, we see pretty like reddish map, which is indicating very weak basis by and large across the states. And this is of course like pretty much suggesting that we are having a great yield or new crop coming to the market. So by and large, all the regions, especially corn and soybean producing regions, are seeing very weak basis. And when you look at the Ohio or Indiana regions, even though we are not having really great yield, but the basis levels are pretty low. This is about more than like 50 or even sometimes 60 below the nearby futures market. That's the current market situation. And let's move on to actually a little more specific trends for Ohio. So this is the Toledo region, Ohio basis for both corn and soybeans, as you can see. And these time trend charts, in the time trend chart, the blue line indicates the 12-year average, and the red line is the 2024 basis movement. So in corn, we see an exceptionally weak basis continued throughout 2024, and it seems the seasonality was almost wiped out by the large supply that we had last year. And I think the seasonality will be recovered next year because our production is not like as like that much like gigantic as before, but I'm not sure if the basis can come back to the historical level because of a high national yield. So probably it will depend on the changes in local grain stocks. And when you look at the right panel, in soybeans, so far the basis movement has been fairly close to the historical basis pattern. Although recently the soybean basis was a little more weakened, but I don't see a strong reason that the soybean basis has to be further weakened. So my 2 cents is the soybean basis will likely follow the historical pattern. So I think that those are, I think, more or less what I have for the production numbers, and hope that this is giving you some useful insight.
Sinky, I appreciate the update on the production numbers.
Mhm.
What about the stocks? Like I recall in our area as we were starting harvest, maybe a month before starting harvest, there were a lot of grain trucks still hauling old crop into the elevator. Can you talk just a little bit about the grain stocks report, the grain
Yes.
stocks themselves?
Yes, in fact, this is a good time to talk about this because last month we got the new grain stocks report from the USDA, and these numbers are actually from the September grain stocks report released from USDA. But one thing I want to note is the report itself is pretty regressive rather than progressive. So this is really reflecting the old crop storage status instead of where the new crop will coming and seeding. So that's just like what you should remember. And when you look at this chart, this is a national corn stock trend. currently we have 1.76 billion bushels of old crop corn, which is comparable to some past year that were pretty bearish. A big question mark to me is how much stock we will see in next January. Next January, USDA grain stocks report will show the December stock level, and from it, we will be able to see how fast the market is digesting the massive supply. And depending on the pace, the corn fundamentals will be decided. And when you actually look at this map, this is based on the report I generated this map. So this is state level corn stock distribution. So the map itself is showing where the old crop corn is stored now, and Ohio is reported to have 95 million bushels. Of course, this map will probably change a lot because the new crop production. So presumably Ohio will show and will likely turn out to have lower stocks in the next report, whereas probably some Western Corn Belt states will show some significant jump in its stock level in the next report. That's what I can imagine. And when we move on to the soybeans, the national soybean stock is moderately higher than in previous years. So currently, we have about like 0.34 billion bushels stored in the storage for soybeans, and this similar to corn, the December survey, which will be reported next January, should be a good indicator to read the market. But also for soybeans, the March stock level will actually be also very important, as it will show the export competition progress with Brazil. So that's something that I want to highlight as well. And one more thing for the storage or grain stocks is this map. So this is a map for soybean stocks, old crop soybean stocks now. And Ohio has about 20.6 million bushels of old crop soybeans. Again, like corn, the map will likely change a bit by the new crop production, but it's probably two things: new crop production supply, and also the storage capacity distribution. Those two factors will decide the next map that we will see next January.
Thanks for the update, Sinky, on the stocks. You've discussed mainly supply here in the last few slides. We know that in order to use up this supply, we have to have reasonable demand and use. Can you share just a few of your thoughts or analysis, if you will, on the demand side of things?
Yeah, sure. Probably like as I mentioned before, like probably demand is really a moving target. So there are really not many things that I can confidently say, but at least we can track what's happening in the export side. So probably among the demand estimates, I want to talk about export prospect. And here is a table for global corn production estimates. Globally, the corn production is estimated to be a little smaller than last year, about 8.7 million tons less than last year. And this is about 342 million bushels drop. So like this is maybe a moderate drop. And the reason for this drop is weather shock in Black Sea. The reason for this drop is the weather shock in Black Sea region and EU. So in terms of bushels, the European countries are expected to have around 550 million bushels less production than last year. So when you look at these yellow circles, those are of course denoted in million tons, but those can be converted into the about 550 million bushels. And this might give you some this situation might give some opportunities for U.S. corn exporters, because anyway, some regions are having a short supply, and that's gonna be a room for export for many U.S. exporters. And here's the corn export progress figures so far. So we just passed the 5th week of this market year, so it is really early to jump into any kinds of conclusion, but at least corn export made a good headway for the past few weeks. And when looking at the country-specific export shifts from last year, the listed countries are the top 6 importers And they turned out to purchase more than last year, except for Mexico. So particularly when you look at the EU bought much larger corn than they did last year, presumably because of their production issue. One thing that surprised me in this chart was the disappearance of China. China used to be always one of the top buyers for the past few years, and this year it is not as much active as before, at least at this moment. So that's what's happening in the corn export. And this is a soybean. So unlike corn, the world soybean production is expected to be much bigger than last year, mainly because of US and Brazil. So globally, the soybean export will be more competitive, but I want to note that the Brazil and Argentina production numbers can change depending on their growing season. So the soybean export prospect will vary a lot by South American weather. And when you look at the the current export progress for our soybeans, so far we have made a little slow but a decent start to export progress in soybeans. So China is still the biggest buyer, but its purchase is about 9% lower than last year. Mexico is now obviously one of the largest trade partners for US crops. However, Mexico also did not make purchases as much as last year at this point. Again, like corn, the EU showed a significant increase in its soybean import from the US. Here, I'd say the key takeaway is Brazilian production. As we can see from the 23, 20, 20, sorry, as we can see from the 2023 export trajectory, which is depicted in a yellow line in the left figure, our export progress just almost stopped whenever the Brazil started like new crop harvested and they supplied it to the global market. So the key determinant of our export market will be how we compete with Brazilian new crop early next year. So that's I think more or less what I have for the export side data.
Sinky, you're referring to on this soybean chart, you use the word stopped exporting to Brazil, but you really mean that yellow line flattened quite a bit,
Yes,
right?
yes,
That inflection
yeah.
point in
Those are kind of
January, February.
yeah, that's a cumulative level. So basically, there's really like flatten out means there's no additional export made from our side.
Good. Good explanation. I think we're also accepting questions in the Q&A and or the chat if you want to throw questions in as we're going for Sinky to answer as we round out the end. Sinky, you've given a really good summary of supply and demand, a little notes on exports. Are there any other wild cards that you would propose to the growers that are on the call that might be out there that might
Yeah, sure.
influence the market, right?
Yes. So here are actually a couple of wild cards I want to highlight. So obviously, like competition with Brazil and Argentina, I think that is the top wild card we have to keep an eye on. So the competition, especially I think soybean will be very sensitive. Soybean market prospect will be a little more sensitive to the production situation in Argentina and Brazil because these two countries are expected to have a larger soybean production in this new market year. So the competition like situation will be really depending on their production system. So that is, of course, the number one wild card I want to pick. And the second one is the China crop productivity. I think, that requires a long-term attention. But anyway, China started adopting the genetically modified seeds, and we know, like for the past 30 years, our like U.S. crop production system has improved a lot, like thanks to the genetically modified crops. And China is now really adopting this like new technology. So probably depending on that, and they really push hard to make the self-sufficiency of the food supply system. So it's kind of actually part of their efforts to cutting their, like global supply chain in the agriculture. So in that sense, we will see how this adoption and all these kind of productivity enhancement efforts will make difference in the global agricultural global supply chain. So these two things are, I think, the major wild cards. And one more thing, the India's push toward corn-based ethanol, that is a little bit interesting point. So India was like Asia's like top corn exporter, and recent push to make more corn-based ethanol turned India into a net importer for the first time in decades. So, and this can scramble the global supply chains. And in fact, nowadays, Indian poultry industry is looking for duty-free imports of GM corn these days. So this might actually open some opportunities for U.S. exporters, especially for corn. But still, this is pretty, I think, long-term. We need a little more time to see whether what kinds of consequence will come by this push. And the other one is the EU regulation for deforestation-free products. They actually pushed this pretty hard, but nowadays I think because of several implementation issues, EU Commission recently proposed 1 year delay. So I think it is very likely to see this policy will be pushed off at least for a while. So that's something that I just wanted to update. And the last one is the Black Sea tension is still evolving. So war is still there, and and that's obviously affecting the supply chain as well. So on even October 7th, a Russian missile struck a grain vessel at the port of Odessa. So still, I think this risk is existing, and we are at any time we can face some shock in this side, and that will sometimes maybe affect our supply chain in a beneficial way for the price fundamentals. But anyway, so sometimes it's gonna be also stir the market and make the market more volatile. So that's why we have to keep an eye on that regularly. So that's the last wild card I want to mention.
Thanks, Inky, for bringing up kind of some extras that maybe we don't always think about. The Brazil and Argentina thing, I think, in China are always on our mind, but you have a couple extra there that help spur thought. I want to open it up. I think you're wrapped up for your presentation. We have a few minutes that we'd like to open it up to any questions. And while many of you, or while others of you are thinking of questions, there is one question already in the Q&A. Sinky, perhaps you see it. I will read it to you. What is the carry in the market indicating? I know you didn't spend a lot of time talking about market carry from this new crop or from harvest until January, March, or the May contract, or even July. But what is the carry in the market indicating?
So when we are talking about the carry in the market, especially maybe I think this person meant the carry in the futures market. So that's actually a very good indicator to see how market is really incentivizing people to store and supply it later. So probably this kind of large supply case, the market carry usually typically pronounced. So the carry itself is actually defined by the difference between two different futures contracts. So meaning that if the nearby futures contract is much cheaper than the further futures contract, then we say there is a market carry or positive spread between the futures contract. And what does that mean? That means market is basically pricing more to the crops coming later than what's coming right away. So it's kind of really a incentive mechanism that people let people to store a little more and supply it later because they are seeing a huge new crop harvest is coming nowadays in the market. Then market is trying to push it a little bit, try to put it off and get the supply a little bit later, through this carry mechanism.
David, are there other questions? I'm not seeing other questions in the chat or in the Q&A. So a question from me on the demand side is there any demand uptick related to renewable diesel and or the ethanol possibilities, unleaded 88 or ethanol in general? for corn and
Well,
beans?
yeah, I think by and large, USDA like expects there will be a little bit bigger demand because the large supply means actually all the crops, especially corn and soybean, those prices are relatively cheap compared to last year. So probably that like weak fundamental itself will like push the demand a little bit further so that there will be slightly bigger demand. But anyway, these are all the there is a physical capacity in many demand sectors. So probably it's a little bit hard to imagine that all the demand sectors suddenly like turned into buying a lot more like corn and soybeans at the moment. So there will be some minor adjustment and probably in a supportive way, but also at the same time there must be some clear limitation of of increasing the capacity of the demand.
There's a subtle follow-up to that carry
Mhm.
question, and we may wrap up here unless there's another question pops in. But I'm looking at futures now for corn and Sinky with the December at a 409 and next July of 435, about a 26-cent carry in the futures market.
Mhm.
Um, what I think one individual is looking for, what are those numbers suggesting? If we have a positive 26-cent difference in the futures contracts between December and July, what is that suggesting to a producer?
So like I think there are a couple of curveballs coming to the market. So it's a little bit hard to like judge immediately, but at least when I look at this like carry situation for soybeans and corn, for corn, I think the market is at least treating pretty reasonably the storage incentive. So it's certainly I could tell there is a good like incentive to store corn at least for the next couple of months, given the carry situation now. For soybeans, I'm not sure because even though we are having a lot of soybeans coming to the market, but still the carry is not as large as corn, like based on because given the higher price per unit price for soybeans, we usually expect a little bit bigger carry to fully incentivize the people to have more like soybeans in the storage. But currently, I think the carry like the magnitude itself is pretty similar to corn, which is a little bit less to fully incentivize the people hold up the supply. And also, like, the big game changer is, as I mentioned before, the Brazilian crop. So depending on that, the future market will change a lot dramatically, actually, in probably next January or February around that time. So that's also, I think, why market carry is a little bit, not very clear to see this strong carry structure at this moment. Probably there are a couple of things like, shaking the market and or expected to shake the market. So that's why the carry structure is just there. But yeah, but we will see. I think it's gonna change a little bit.
I'm hearing you say a slight favor. The carry is indicating a slight favor towards storing corn, and you're
Mhm.
cautious about making that indication on soybeans. Am I hearing you correctly?
Yes, that's at least what I read from the data.
Okay, thank you for that question. I think we're going to about wrap up. I don't see any new questions in the Q and
Yeah.
A or chat.
Yeah, if there's no question, can I actually make a quick advertisement?
Absolutely. You make
Yeah,
your advertisement, and then we'll close off the Zoom. Sinky, go
yeah.
ahead.
Yeah, so on November 19th, my department, AEDE, will host the Ag Outlook and Policy Conference. We provide a series of Outlook and policy presentations relevant to Ohio ag industry. So also, this will be a great like opportunity to network with people working for Ohio agriculture. So please consider registering on the program. And with that, thank you for your attention. And I think probably we will have the next coffee and grain market talk. I think was it December 13th? Let me
13.
yeah.
At this moment in time, we have the next Coffee and Grain Talk with Dr. Lee on December 13th.
Yes.
We'll talk there perhaps about the December WASDE updates, Brazil and Argentina production. Perhaps we'll look at one of the commodity inputs, fertilizer, in that coffee and grain markets with Dr. Lee. We really appreciate everybody tuning in. You are going to get kind of an exit survey at the end that are going to ask a couple of questions about break-even prices or your cost of production. And so producers that are on the call, if you would please take those questions sincerely, give us a little bit of feedback about what your perception is for cost of production for corn and soybeans. We'd greatly appreciate it. Thank you again to Ohio Soy Council and your soy checkoff dollars for helping sponsor this morning Zoom. We hope you all have a great Friday and a wonderful weekend. Go Buckeyes.